want to talk about something today for this audience. And first, I'm just going to ask the audience, do you know anybody who's at least 62 and has one of the three concerns in life? One is they want to purchase a home closer to their kids. So they want to sell somewhere and they want to move and purchase a home in another state potentially, but it's too expensive and they can't afford it. That's our first scenario. The second one is they might be living in a house that has a ton of equity and they're on a fixed income and they could use some of that equity, but they can't get it out without selling their house and they don't want to sell their house. And the third scenario is they have a mortgage on a house, they're on a fixed income, and they can't afford to stay in the house, but they'd like to stay in the house. So we have an opportunity here to talk to that audience. So if you're 62 or you know somebody who is at least 62 and you have one of those concerns, we can help you. And I'm Marie Jacobs. I'm with Liv Sotheby's Realty, and I'm a realtor. And Brady, my partner in crime here, who is just such a godsend to me, is a financial advisor in real estate and works for a lender. So he has a double hat duty. So we've got a lot of experience here to help you with this situation. So I'm going to begin with a story, and that is a story of a client. So we're going to be talking about reverse mortgages and why it's a good idea to get into a reverse mortgage if you're at least 62. And a lot of people who are at least 62 might remember the 70s or the 80s when there was a lot going on in reverse mortgages, and they might have had family members or friends who lost their homes and got kicked out because they no longer could afford to pay the reverse mortgage, or they used up all their equity in the house and they got thrown out. And that never happens anymore. There are so many governmental controls and protections that you will never lose your house. You will never be kicked out, even if you use up all the equity in it. So Brady's going to explain a little more about that in a bit. But first, I want to give you an example with a client, and then we'll bring Brady in and he can kind of explain some of the details. So my clients lived in Nebraska, and they're on their way here. They have an adult son. They've been retired for many years, and they'd like to move here. Well, Nebraska to Boulder in terms of real estate value is significantly different. So they're selling a house for $400,000 and they're going to have to purchase a house closer to $700,000 to get an equitable house. And they didn't know how they were going to be able to afford it. I mean, they were putting all 400 into a mortgage, but that payment was still going to be high, especially in our current situation with high interest rates. So we suggested using a reverse mortgage, and I'm going to let Brady explain just how that works.
Thanks, Marie. Yeah, I like those three scenarios that you pointed out. Like if you're in these positions, reverse mortgages can help. And the history of those, the reason those were frowned upon in the past, it's kind of a misconception, because what happened often in the past is it was usually the husband that was older, and it used to be that you have to be 62 or older to use it. And if the husband was 62 or 63 and the spouse was, say, 59, then they would say, well, let's just not put her on the loan. And so the male, the husband, would be on the loan. And then when the husband passed away, because the wife wasn't on the loan, she had a problem. But so the HECM, it stands for Home Equity Conversion Mortgage. I'm not really fond of the term reverse mortgage. I use it because everybody, has just associated it with reverse mortgage. But the term reverse mortgage doesn't really explain what this kind of product is. Home Equity Conversion Mortgage is the name of it. And if it's a government program, it's an FHA program. And the reason they call it a conversion mortgage is because it allows you to use some of the equity in your house as a liquid asset. So it's just a line of credit. Now you can use it in a purchase like your clients were talking about, or like you were talking about with your clients. They can use it with a purchase. So you can purchase purchase the home with the reverse mortgage. And instead of putting, all $700,000 down to buy the house with cash, they can put 400 or something like that down, and the reverse mortgage covers the difference. And the reverse mortgage is unique in that you don't have to make a payment. So if you can, if you want to, and there are sometimes reasons where people will do that because there's some tax benefits for doing it. but most people don't. And if you, rather than making a payment, the loan just accrues interest. So by the time you pass away, then you'd probably owe more than when you started. If you didn't make payments, you would owe more than you started, but your equity is also increasing to offset that. And you're living in a home closer to your family, closer to your kids and grandkids. Like in this scenario, that's what was important to them.
So
So
let's talk about that in real dollars terms. So a $700,000 house at these high mortgage interest rates is going to cost, I'm just going to put an estimate of $3,000 a month. Some of that will be taxes and insurance. Actually, it's probably closer to $3,500 per month. But your principal and your interest payment, they don't have to pay. They do have to pay their taxes and insurance once a year because those are not part of the reverse mortgage. But you can probably cut out of that $3,500 mortgage, maybe your taxes and interest per month are
maybe 500 or 400, yeah, something like that.
So you can take out $3,000 in a principal and interest payment and just not have it anymore and be living in a $700,000 house for maybe $400 or $500 a month.
Yeah, and there's this funny concern that people often have where they say, no, but I want my children to inherit more equity in my home, or I want them to
That's a
inherit
good
the
point.
home. And I think of like so I was a financial advisor and accountant for 18 years. So I have experience in that field. And most of the time when we pass away, our children are going to be in their 50s. They're probably going to have a home of their own and children of their own, maybe grandchildren of their own. They're not going to move into the house, A. And B, if so my parents are still living. They actually have a reverse mortgage. They don't need it, but it made sense for them. And there's some reasons why we did that. But when I say needed, I mean, it wasn't like they weren't broke. It just made sense for them for other reasons. We can go into that some other video. But like if they're thinking to themselves that they want to leave me and my siblings more money, my siblings and I would start yelling at them like, no, mom and dad, live the life that you saved for, live the life that you sacrificed for, live well, please. I do not want to inherit. Like when you pass away, I'd be glad to inherit whatever's left. That's great, me and my siblings. But please don't make that your primary motive. If you can live better by not having that mortgage payment, or you can also use reverse mortgages to create income. So reverse mortgage can also be a way to give income to the homeowner monthly. So they could get $1,500 or $2,000 or $2,500 a month for the rest of their lives, and the reverse mortgage is the source of that. So there's different ways that people can use them. But I think sometimes when people say, well, I don't want to do this because then my kids will inherit less equity in the house. Sometimes people even think that the bank owns the home in a reverse mortgage, and that's never been true. That's just a weird myth that's been floating around. It's just like any other mortgage. There's a lien on the house because you've borrowed money, but that once the home is sold, that lien is paid and the equity goes to the homeowner or the homeowner's children if it's through death. So, people have these weird misconceptions about them, but it's a government program. It's very successful. In fact, they have a similar program in many first world countries, England, Canada, and there's like 40% of elderly people use them because
So
for
let's
whatever
talk a
reason they
minute
didn't have that
about
stigma.
let's talk about how it works when you can even get income. You can get a check every month off of your reverse mortgage. Explain that a little bit.
So let's say I'm going to use just a really clear, simple example, but it doesn't have to be this example only. So let's say I own my home outright. Excuse me. Let's say my home is worth say $800,000 or something. Instead of purchasing with a reverse mortgage, like you said, I could just get a reverse mortgage on the home I'm currently living in. And rather than taking a lump sum of several $100,000 and putting it in my bank, I can just say, I just want $1,500 a month. And that will continue to pay me. And there's a calculation when you run a reverse mortgage where all the financials will run these tables and show you exactly how much you can get every month for the rest of your life. And FHA insures that. So even if you live to age 120 years old, that income will still come in, even if you've spent all the equity in your home.
I think that's a really important point to emphasize here too, because if you don't have, if you get it younger, like if I got it now, I might live 30 more years. And so knowing that I could surpass the value of my house if I had a reverse mortgage. I still get to live past that and stay in my house. That's really important for people to understand.
What people should understand, because we mentioned it earlier, but kind of touches on that and kind of touches on the earlier topic where I said the male was older and the female, statistically, it's not always that way, but statistically, that's what happened most often. FHA has instigated new rules where if you're married at the time of the reverse mortgage, even if the spouse is under 62, they protect the spouse's ability to stay, even if the spouse wasn't on the loan. So they call it a non-borrowing spouse. So if, let's say I'm 63 and my wife is 59 and we get a reverse mortgage because we're married when we get it, if I pass away at 80, at that point she would be 76 or something. She could live 30 more years into 106 years old or something, and she would be able to stay in the house. They won't ever foreclose on her just because I passed away. That was the risk that people took earlier if they had one spouse that was above the age limit and one below. And that's what caused this whole frantic thing where like, oh, they just kicked grandma out of the house. And it's like, well, they didn't really. They agreed to that. They needed the reverse mortgage when the husband was 63 and she was 59. Admittedly, that's not a great thing, but that was what happened, and it kind of makes sense from a logistical and financial standpoint. But that's all been corrected by FHA, where they don't want that to happen either. So the spouse is protected even if the spouse is under 62 when they get it, as long as the other spouse is over 62.
And I think that is really critical, again, to educate people on, because when you hear stories about your grandparents and that happened to, or somebody else's grandparents, and it was 40 years ago, it's different now, and people are protected now, and it is a great program for people. And one of the other things we didn't talk about, which we can briefly, is if you're in your house and you can't afford to stay in the house, so you can do a refinance into a reverse mortgage. So you can purchase with a reverse mortgage and you can refinance with a reverse mortgage. So there are people who fall into that category now too.
So you're talking about replacing your current maybe your payment on your current mortgage is $2,000 a month, principal and interest. You can replace that with a reverse mortgage and stop making payments. And instead of making payments on the interest, it simply accrues. So you can live in that house. We do a lot of those kinds of reverse mortgages because people want to retire, or maybe they don't want to, they just need to for health reasons or something like that. And they thought they were going to work 5 years longer or something, or they just planned it differently than life turned out. And all of a sudden they're 65, 68, something like that. And they're like, I really want to retire, but this $2,000 a month mortgage payment that still has 14 years on it or something is a problem for me, but I have a lot of equity. What if I just replace that mortgage with a reverse mortgage? Then I don't have payments, and you can even get income from it. It'll be less income than if you own the house outright, because it's not an either or thing. We run these calculations and we say, okay, what's your mortgage? Let's pay that off. How much more of a reverse mortgage will FHA allow? And we can turn that portion, divide it out into the years where you get your income. So they're very flexible. They're protected by all sorts of, by CFPB, which is the government agency that protects consumers when money is borrowed. So they're involved with like credit cards and things like that to make sure that's legal and fair, and mortgages and things like that. So CFPB is involved. They have their fingers in that to make sure that it's fair with customers. FHA insures it. It's administered by the Housing and Urban Development. Like these are very highly regulated products, and they're designed to help people 62 and older, I should say. I mean, 60 is the new 50, and 50 is the new 40, right? But
exactly.
It's designed to help people stay in their homes. The government doesn't want people out there, not being able to afford homes either. And if your only option to get to the equity in your house is to sell it and go rent somewhere, you still have a problem because you still have that rent to pay.
Exactly.
You have a big lump sum of money, but you can have that lump sum of money and stay in your home and not have a payment. So they're very flexible and helpful.
Well, that's great. This has been just an excellent time with you, Brady. And thanks for the, in a nutshell, kind of summary about what we're doing with reverse mortgages. I'm seeing it more and more with my clients over 62. And I'm planning on, as soon as I can get in a position to get a reverse mortgage myself, I'm eligible. So why not get it early? And we're going to have, we have more videos now on my YouTube channel. So you can find me on YouTube, and Brady's featured in all of my videos. And you can also find me at Marie Jacobs Realty on Instagram. And my contact information is all over the place there. So love to hear from you, and we can do a conference, we can do a Zoom call, we can do anything you want to get connected and just get you more information if this is something that can help you. We hope we can. So signing off, Marie Jacobs Realty I'm from Liv Sotheby's, and I've got Brady Mullen here, who is our financial real estate advisor and past financial advisor. And we're really feeling grateful to have you here, Brady. Thanks so much.
Thanks, Marie. We'll see you next time.